Hi folks, it's Aidan CryptoBirb speaking. Welcome to today's special Friday Bitcoin market overview. We're going to take a glance at a couple of different charts, a couple of different screens, timeframes to compare where we are on the major timeframe, lower timeframes, and which trend is relevant, which trend is not relevant, right? And then later we're going to take a look at how Bitcoin does compare to altcoins, right? Because the altcoins have been, I'd say, this sleeping giant for a long time, and perhaps there is a chance for some awakening anytime soon. We're going to take a look anyway. So starting off with the Brave New Coin Liquid Index for Bitcoin BLX, which basically translates the most liquid fractions of Bitcoin on different exchanges, right? Kind of like puts it out in an index, composes an index out of that, and hence can be considered a long-term valuable price data. Here on TradingView, with a little bit of lag, right? It updates every week, if I'm not mistaken. So starting from the very origins, Bitcoin kind of like history, the first registered price of Bitcoin appeared in July 2010, right, which was the first exchange. It wasn't much, of course, at that time, right? If I'm not mistaken, the very first price up there that kind of like was one of the first transactions was basically $0.0009, right? I may be wrong about it. You may want to check it out. Check it out still. What matters is that we had the first halving in 2012 towards 2013, right? Somewhere over here. And ever since, or actually until the very first listings, right? Since the very first listings, we got to see a powerful rally over 30,000x, right? This is a powerful rally from the very lowest valuations on the record, basically all the way up to the first peak of $31. Then we saw a major winter, with an almost 90% drawdown, even if not more, towards 1.8098, right? So this was the first bear market, and it only lasted, interestingly, for half a year, right, approximately, which was pretty short, which shows how aggressive Bitcoin movement was at that time. Then we saw a couple of accumulation, perhaps even a year-long accumulation between Q2, Q3 2011 and correspondingly same time of the next year, right, when we got to see the first halving, when the miners got to see the first impulse on the reduction for the block basically rewards, right? So it was increasingly higher over the time to mine Bitcoin, which of course translates to spiking the energy cost to mine the same amount of Bitcoins for the block, right? And this is this whole disinflationary model encoded in the Bitcoin protocol per se, right? That was supposed to be always the cure, according to Satoshi Nakamoto, to cure to the corrupted banking financial systems, right? That led to great financial recession, basically, in 2008, right? So still, I would say that it's important to remind and map out, all those kind of like mining events, mining related events such as the halvings, right? So towards the end of 2013, we got to see this major rally, right? Major rally that was leading towards the halving. Perhaps there might have been a little bit of anticipation, right? There was not much price record for Bitcoin, so not much price of reference on the past that we technicians do So here, since the very first halving, we got to see the powerful rally to the peak, right? Almost immediately. Of course, there were some, kind of like hiccups on the way. Still, we got to see a rally that was basically over 90x, right? So from the halving number one in 2012, right? From the halving number one, actually here, we got to see a rally of 90x towards the first peak, and this first peak of 2013 was towards the next peak was $12.50, right? $12.50. Then we followed quite a long bear market, which was of course additionally induced by the Mt. Gox basically insolvency and bankruptcy. After the hacks, there was some more bearish news at the same time. Once in a while, like China bans, etc. It only kind of like facilitated and empowered the bear market, right? So the next halving, happened basically in 2016, somewhere over here, if I'm not mistaken, right? Or somewhere over here. Here's 2016, so it's going to be somewhere around here. And why it matters, right? Of course, I can look up the data. It's not so much relevant. What matters is that from the halving date, from the second halving date, following this major breakout of the accumulation that lasted a couple of months, right? Almost a year-long accumulation, by the way. It was pretty interesting. A year-long bear market and year-long accumulation for Bitcoin, basically jumping between the bouncing of the floor around $250, if I'm not mistaken, to $200. What matters is that following halving after the first one, right? First one gave us 90x, right? The following one, the halving number 2, gave us basically 30x, right? So we got to see the 30x up there. And well, that was a powerful movement, for a very long for a very big market already at that time, right? It was not, of course, nowhere near as big as it is right now. Still, it was big for the sake of the time being at that moment. Of course, we got to see the CME futures listing, on the shorts up there in 2017 and the very peak breakthrough moment, which was pretty interesting. Right, the market opened and we basically kind of like started tanking and led into the bear market. Then, of course, we got to see the miners capitulation in November 2018, right, which was pretty funny. I was literally on the plane from Las Vegas to Poland at that time, right? And while on the plane, I saw the capitulation happen. So when I got on the plane, I was here. When I get out of the plane, basically I was here, right? So there was this powerful rally, and I was so excited to see that. And that's also interestingly why why so many people started following me on Twitter, which might be a little bit of an anecdote, right? Because I made those kind of like $3,000-$4,000 calls. I can't even barely remember them anymore. Somewhere in January, February 2017, right, around $12,000-$13,000, and of course people didn't believe me at that time, right? Of course, there was much luck in that. There was not too much skill at that time for me, right? Still, it was a positive trigger that basically made people undig my tweets, dig the tweets that I made in January, February, and kind of like decide that, there might have been some sense and knowledge. It was mostly luck. Still, I'm honored to be here with you today. And thanks for listening, by the way. So 2018, right? 2018, 4 months of accumulation, first breakout over $4,000 or $5,000 in February 2019. Then we got to see the powerful free forex rally to $14,000. Of course, COVID came on the way, and right after COVID in May, we got to see in our halving, the halving number 3, right? And the halving number 3 from the previous halvings, of course, was a little bit different because it kind of like brought, it was brought right after this unexpected black swan event of COVID, right? It's impossible to predict with the charts the pandemics when the meteorite basically crashes into Earth, or when the dinosaurs will come back from extinction. Like, you don't know that, right? Or when the UFO in Mexico lands, you don't know this stuff with the help of the charts, right? So the charts are very informative because they tell you the song of the past. And that's why it's more relevant, right? Because what's on the left-hand side is 100% factual. This happened. There is no point and way to argue something that happened, right? It's a fact. So the halving number 3 basically let us made 7x towards the peak, right? Towards the peak, almost $70,000 at that time. And then the beautiful kind of like a double top pattern or so basically took us to a major 60-70% drawdown, almost 80%, 78%, if I'm not mistaken, 70. Almost $1,000 all the way down to 15,500s, which basically happened, of course, induced not only by the Terra Luna crash somewhere early in the year in May, June, and then, of course, additionally induced and provoked by the FTX collapse, which was in early November 2022. And here we are, right? Here we are after 3 halvings. The first halving 90x, the second halving basically gave us 30x. Right, it's going to be over here. The third halving gave us basically again 7x. So perhaps there are diminishing returns in terms of the halving to peak. Still, what we know for sure, factually, 100% certainty, is that after every halving there was a time of very powerful rallies, right? Of very powerful rallies. We're talking 30x, we're talking 90x, we're talking 7x, right? That's a fact. That's not something that we can argue. That's undeniable situation that happened, right? So that is fact number 1. We know that for sure, right? So what are the chances that with the next halving basically coming into play in March 2024, right? What are the chances, arguably, that we're going to see that this halving is going to be different, right? Because the next halving being somewhere towards the mid-April of 2024, we know that again it always brought positive massive rallies. So there's no reason to anticipate it's going to be a little bit different. First off, because of the fundamental intrinsic value sort of like increase, right? Intrinsic value in the digital scarcity viewpoint, not the traditional stock market, kind of like models up there for the cash flows. We don't care too much about cash flows in Bitcoin because there is no centralization, right? Still, what matters is that technically and historically, and histories can be used as reference to more occurrences of similar kind that happened in the past. So we have 100% win rate so far on betting that after every halving, there's going to be a powerful rally. So there's a chance that this powerful rally comes in, and from the price of halving, Bitcoin rallies in some diminishing manner, right? So perhaps it's going to be less than 7x. Perhaps it's going to be 3x. Perhaps it's going to be 4x, 5x. Nobody knows that, right? I'm not here to tell you or predict the future because it's impossible. I'm only here to comment on the past and draw conclusions, the actionable conclusions, right? So that is the fact number one. The fact number two is that Bitcoin never came back in history. It never came back to its halving prices. It never came back to its halving prices when you have a look again. All right. So it's gonna be basically the situation where if you buy at a halving price, historically Bitcoin never came back there. So you are in profit, right? So knowing that after every halving, Bitcoin gives you powerful rallies and it never comes back to the same prices, it may be an actionable point to consider, perhaps to purchase into the halving, right? Again, nobody knows what's going to happen. I'm just giving you some food for thought. Perhaps you find value in that. Another point is why it's important. This line over here is a 200-day moving average. This is a bull market or a bear market trend, and depending if it curves or it continues up or down, this is what defines a bull market. This is the bull market. For the sake of I'm not even sure you can sort of like hide it. Still, worst case, you can even observe the average alone. You can just focus and mute out every other indicator and just focus on the average itself. If the average is going up, it is a bull market. If the average is going down, it is a bear market, right? The average has been going up for the past 9 months consecutively, right? There might have been a little bit of slowdown, of course, due to the summertime. Still, we're talking about over 100% growth from $15,500 over to $32,000 approximately, right? Such moves don't happen in the bear markets. And we're talking about a consecutive growth for 9 months in advance, 9 months in a row. This is not accidental. This is not a bear market. Wake up. This is bull market. And the sooner you realize that this is a bull market, the sooner you discover the opportunities. And speaking of opportunities, now let's move on to the closer look up at the bull market situation up there, right? Because Bitcoin is right now literally bouncing off the very well established support, right, of the February highs of the swing high in February, basically at around $25,000. It found support in there around, of course, there are no ideals, no perfect solutions. So expect that there's a little bit of slippage, a little bit of areas instead of specific lines, right? If the whole world wanted to buy Bitcoin at $25,000 and not a single cent more or less, then there's going to be an very long queue to do it. Which is why in a rush, you just are ready to pay more for the sake of it, right? So Bitcoin found a very essential support of $25,000, and it did so, and it has just done so again, right? With a decent rally towards almost $7,000 right now. So what I would say is that first of all, it is worth observing that ever since the breakout in January above the 200-day baseline of the Burbicator Pro, 100-day Burbicator Pro baseline, which is sensitive to the most recent price action, it was kind of like moving up for about 7-8 months until September and August came, right? And well, you shouldn't be surprised too much because every single time I posted information on Twitter about this slow Q3 and the seasonal weakness during August and September being the only negative month on average, right? Basically, this is in line with the expectations, right? So there is a little bit of slowdown. Doesn't mean it's a bear market. I wouldn't necessarily say so, right? It's something definitely to consider. I just enter into a position with a breakout based on my system, which I'm going to tell you in a second and show you in a second. What matters still is that Bitcoin finds relevant support, right, at around $25,000, and it does and continues to do so. So as long as it holds and sees the positive reaction at $25,000, it makes sense to kind of like anticipate the resistance coming from the mean reversion levels. And the mean reversion means basically that the prices oscillate around the averages, right? You see the times when the Bitcoin is below the average, which is underappreciated, and which is over the average, which may be locally overappreciated. And this is where it often comes back and heals up, reverts to the mean, right? It reverts to the average value. And this average value is a reasonable, fair point of price, right? So not only because it's average, not only because it is unbiased, kind of like, and just, I'd say, neutral on its own, but also because people love this so-called anchoring effect, which is a behavioral bias, right? This behavioral bias, information processing bias, which basically tells you that because there are some numbers printed, right? Because there are some numbers where Bitcoin bounced in the past, we're going to put more anchor, we're going to put more trust in those numbers, even though they're pretty much the same. And they often align, by the way, in round numbers, which is pretty interesting. And such as these moving average, this baseline, 200-day baseline moving average for BPRO aligns around $28,000, and this is a round number. There is a high chance that if we continue higher, $28,000 is going to be exactly where the short-term resistance may be faced, right? Or at least the initial price barrier coming from the order clustering. Because people expect this level to work as a resistance, they will cluster their ask orders, their sales, their take profits, which is going to slow down the buyers, right, and provide some little bit of like equilibrium. The moment we get above the average, which may be, the case as well due to the noise, if we get a reliable matter to break, of course, above the $32,000 highs, that might be what I would expect to happen in quarter four, because eventually quarter four is the best performing quarter, is the best performing trio, like October, November, and December give you over 50% average return. So September gives you basically September performance. If you buy in September and sell in October, right, you tend to lose 6% on average, right? So it is safe to assume, even though you might be wrong or right, it is safe to assume that from the opening price of September, right, which was basically close to what was that, $26,000 approximately, you can take down 6.5% to the downside approximately to expect that on average that might be the average expectation, right? So that may be a point to consider for sure, right? And again, this may be the potential resistance. Nobody knows what happens there. However, after meeting some initial opposing force, I would say that quarter four is giving us very powerful rally chances. So I would say that if we get above this average, finally we overcome this resistance, there might be a chance we get to see a powerful Q4 rally of 50% or more, right? 50% from 30,000 is going to take us somewhere into mid 40s, right? 40,000, 50,000. And it, of course, aligns with the anticipation towards the halving. So it makes a lot of sense. Now let's take a quick look at my system. So it triggered the buy signal with this very bull trigger, right? With a breakout over $26,000, basically approximately. Here I walked. There's a position I posted on Twitter, 26,200s. Is an entry, right? And I'm rallying kind of like over tightening stop losses. So traded my stop already from here towards here, 635 right now, of course, and I'm gonna trade it depending on the BPRO indication. So I'm in a buy position right now, right, for the position trade system. So on the short-term time frame, again, the BPRO momentum bands are basically showing you some uplifting conditions, right? So uplifting conditions is a good thing for the bulls. We're crawling, you can tell, in a compression right towards the high band resistance. And this high band resistance basically may tell you that unless you see a powerful breakout, just like we saw up here, which most of the time basically tells you about a powerful rally to be expected, unless that happens, we're going to most likely just oscillate between the bounds, between the low band of 25,400s and a high band of 27,000 approximately, right? So if I were to give you one of the final points to consider, is to watch the altcoins, because they had been underperforming Bitcoin by a lot, right? With the main reference point from the last year's August, Bitcoin is well above it and is holding well above it, while altcoins are still down. The altcoins are not the best place to be. They have not been the best place to be so far recently. However, it also means that Bitcoin may be the leader in quarter four, and this may give a lot of liquidity